Howdy there, folks. I just received a whole bunch of news about a whole bunch of different stocks, and I want to share with you guys some news that you're not going to really see on the mainstream. Let's just put it like that. No press releases or anything like that in regards to a few stocks that I want to share with you here today and kind of what's going on here. We're going to talk a little bit about the markets, what I'm seeing that's going on beneath the surface and things like that. So I hope you guys enjoy today's video. As always, before we get into this, make sure to subscribe to the channel first off. Also, if you want some free stocks from Moomoo, professional trading platform, up and comer in the United States here. 5 free stocks valued up to $3,500 for signing up, creating an account, and I believe the more money you deposit with them, the more free stocks you get. So if you want that deal, check out pinned comment down there. Also, massive deal coming up for the private stock group in the Financial Fortress program for Valentine's Day. If you want to get that deal as soon as it is out, go ahead, put in your name, your email, and we'll send that over to you as soon as it's out, okay? So first off here, I just want to show everybody kind of where we're at for the 52-week high versus current price right now. IWM, think of that as small caps. We're about 18% off of all-time highs, essentially. QQQ, think of that as NASDAQ, down about 12% there. SPY, down 6.4%, and the Dow is down about 4%. Now, Amazon, Apple, Google, a lot of those stocks ended up coming through for earnings season, and so that's why we've held strong for the big indexes. Obviously, small cap season's about to start. We're going to get into that in just a moment here. As far as Bitcoin, Ethereum, big bounce back for Bitcoin and Ethereum. Now, this is a big deal, not really if you own Bitcoin, Ethereum. I think it's a pretty big deal for the markets in general because the markets, I think have been a little scared, especially with Bitcoin. Bitcoin fell all the way down to 33,000 recently. And a lot of people are like, oh my gosh, man, like where's the bottom for this thing? I think the stability definitely helps out the market mentality, but you know what it helps out a whole lot more than the market mentality? It helps out this next thing, okay? Voyager Digital stock. This is big, right? Voyager Digital stock just, a couple of weeks ago was basically trading in the sixes. It went all the way down to the sixes because people were looking at Bitcoin falling and falling and like, my gosh, where's the bottom? Is Bitcoin going to go down to 20,000 now? 10,000? And a stock like Voyager is very dependent upon the feelings and the price of Bitcoin nonetheless, okay? I mean, this company has tremendous growth, assets under management. Everything's been phenomenal for Voyager Digital. But at the end of the day, when it comes to stock, right? People really look at the Bitcoin price, and Bitcoin price can kind of dictate where Voyager stock goes. And so, obviously with Bitcoin coming back now, it's looking really, really good for Voyager, right? If Bitcoin was to suddenly double tomorrow, let's say, which is completely unrealistic, but let's say it went from 43,000 to 86,000 or whatever, Voyager stock would likely triple in that scenario. Whatever Bitcoin's going to do, usually Voyager Digital is going to even outperform that even more to the upside, essentially. So yeah, Bitcoin coming back, Ethereum coming back, and both those stabilizing. Really, really good news for Voyager Digital stock, okay? Coinbase, also another great news. They're not going to perform quite as amazing if Bitcoin goes up, but it's going to be, fairly in line. So 5% move there. On January 24th, Coinbase fell all the way to $165. So it's bounced back $40 a share pretty darn quickly. The stock trades very, very cheap. This is one of those stocks as long as, this is the key, as long as we don't end up in a multi-year bear market for cryptocurrencies, Coinbase is I don't want to call it easy money, but it's pretty darn close. Now, if you get a multi-year bear cycle for cryptocurrency and Bitcoin, just over the next few years goes from 40-something thousand where it's at today to 20,000, stocks like Coinbase and Voyager are going to flounder. They're not going to do well, right? But as long as we're stable or we're uptrending on Bitcoin and Ethereum over the coming years, stocks like Coinbase and Voyager are going to be huge money makers. Obviously, Coinbase isn't quite as much of a money maker in terms of the bullish aspect as something like Voyager Digital. However, Coinbase has far less risk than a Voyager Digital, okay? So that covers that. Now, Robinhood not making that upward move like the others. This one actually fell 8% today. And the reason is the hood's very dependent upon stock still at this point in time. So when it comes to Robinhood, if crypto moves up, it can help Robinhood, but it just doesn't help it nearly as much as Coinbase and Voyager. Folks are going to look at Coinbase and Voyager as being those stocks that are extremely dependent on whatever happens with Bitcoin. Robinhood is really still thought of as a stocks brokerage. And so if stocks are doing well, people like to own the stock, right? If stocks aren't doing well or things are not in the best place, people get really, really scared. Now, Robinhood, here's a mistake, right? Robinhood has a lot of competition from a lot of players out there, and their biggest competitive advantage Robinhood ever had in this company's history used to be the fact that they were known as the place where you could buy stocks for free, right? But that went away a few years ago. And so, that whole huge competitive advantage they had just went away essentially. And now they're stuck as kind of being this kind of tough spot. And, if crypto goes up, it doesn't really help Robinhood out nearly as much as Coinbase, Voyager, and some of the others, okay? Tesla, I want to speak about Tesla for a moment here. So I definitely have heard some folks kind of chatter about Tesla, right? And obviously with the recession fears and things like that, and what goes on with Tesla in a recessionary scenario. And I can tell you, more than likely if a recession was to play out, Tesla, sales will drop, right? The question is, how much do they drop? No, I think it's very important to remember that even in a bad recession scenario, that does not mean it's the end of the world for Tesla. And what I want to show you is how many cars were sold just in the United States, of America in 2009, 2010, and 2011. In years in which we were going through the Great Recession, the credit crunch, housing prices were completely depressed, stock prices were completely depressed, massive amounts of jobs were lost, and it was almost impossible to get a loan for just about anything, never mind a car loan. And what you're going to find is actually things hold up a little better than you would have thought, right? So here we go. We're looking at the United States market total for automobile sales annually. And we're going to find 2009, you would have thought literally nobody bought a new car. This is new cars, by the way. This isn't used car. This is new cars being sold. And in 2009, like the worst year you could ever imagine for car sales, right? In the United States of America, there were still over 10 million new vehicles sold in 2009. In 2010, which was another horrible year, 11.5 million new cars were sold in the United States of America. And in 2011, still not a good year, but there were 12.6 million new vehicles sold in 2011, okay? And so this is some food for thought when it comes to a stock like Tesla. Remember, if you're going to talk about a Tesla stock price crash, let's say a 50% type crash, it's not out of the realm of possibility, but you would need a massive global recession that takes down the United States economy, takes down the Chinese economy completely, I mean really takes it down, and takes down the European economy all simultaneously to really get Tesla to sell off that hard that would get the stock to sell off, let's say 50% plus. So I think that's some food for thought. And remember, this was in the great financial crisis where, we had banks collapsing, we had investment banks collapsing left and right, and no one wanted to loan money to anybody. And to still put up those type of sales numbers in that time period is actually pretty impressive. Look at 2008 was 13 mil. Those numbers aren't horrible. And so that is some food for thought there. If Tesla numbers were to tank through the floor, obviously the stock price would tank through the floor, but you basically a bet against Tesla is essentially a bet of a massive multi-year global recession. And if you don't get that massive multi-year global recession, then a scenario where Tesla stock falls 50%, it begins to become, hard for something like that to happen, right? Now, some more good news. My wife found this. On a grocery store website. So, Tattooed Chef plant-based burritos. Now, these aren't even announced yet. So, one of the major grocery store chains already has the kind of the promotional stuff ready for essentially Tattooed Chef plant-based burritos. And I love the packaging on these. I think these are going to do tremendously well. Whenever these babies actually get out there, I am beyond excited for this. This is like a huge deal for the company. The thing with Tattooed Chef is they have so many new SKUs coming this year. It's amazing in products like this, like they've never competed in, that I think are going to do very, very well. And, a lot of, there's not even much competition when it comes to a lot of these spaces they're going to get in. And so I am more than jacked up. And I know I don't speak about the chef as much recently because we've been so tied up with the market and what's going on with the market. But here's how I'm feeling with the chef going into earnings. I'm feeling very confident. And if this stock tanks, I'm buying it. If it goes up, I'm buying it. If it stays the same, I'm buying it. Anything under $20 a share for this stock is, basically just, if for me, it's an easy buy. Anything under $20 is an easy buy. So for me, it doesn't matter if the stock's at 10, if it's at 12, if it's at 14, if it's at 16, it's at 8. It doesn't matter. Any price under 20 is a buy for me when it comes to stock, because I believe this company is going to scale into multi-hundreds of millions of dollars of net income over the future years. And so since I believe that, and based upon the valuation, I believe this company is going to be able to command, the stock price has massive room for growth over the next 5-10 years. And so for me, I don't get caught up into, oh my gosh, it could go down on earnings or it could go up on earnings or anything like that. It doesn't matter. It's not going to 20 plus after earnings. I know that, right? And so it doesn't matter what it goes to after earnings. I'm buying it. Go down to 10. Fine. I'll buy more shares. Go up to 12 or go up to 12. It is 12. Go up to 14. I'm not selling it. For me, when it comes to Chef, it literally doesn't matter what the stock price does on earnings. I'm a buyer in the end. So, what I will say with Tattooed Chef, I think this is pretty interesting. I think most of the sellers have already left this stock now at this point in time. I think, the majority of folks that are left in the stock are really the folks that are in this for the next 3, 5, 7 years and in this for the Tattooed Chef vision. Whereas last year at this time, there was a lot of people in it because it was a new hot stock in the market and we were in that peak FOMO cycle in the market. And we got rid of all those folks over the past year. And so now we're just at this point in time where, the only folks really left in this one are really the long-term shareholders. And I think we're going to be able to attract a lot more long-term longs who want to be in the stock for the next several years because of the growth trajectories it has, and that you're just not going to find in other food companies in the world. And so, nonetheless, it doesn't matter what happens. That stock on earnings, literally I'm buying down, buying up, buying, same, buying. P&G, Procter & Gamble. So there's something very fascinating going on in the market. You don't hear this talked about on CNBC. You don't hear this talked about on mainstream media. And you don't hear this talked about really anywhere. And I don't think it's quite, I think there's certain folks that understand this concept of what's going on, but I don't think is talked about very often, right? And it's actually a pretty simple idea. So a company like Procter & Gamble is trading near its 52-week high right now. And you say, wow, with all this market volatility, why is it trading near 52-week highs? Is it because of people want to go to safe stocks, right? Safe stocks like a Procter & Gamble that makes needs-based items? No. What it is when it comes to a company like Procter & Gamble is they've already announced that they're going to be raising price on all their items. And they can do that because at the end of the day, they sell needs-based items. And Kimberly-Clark is going to do the same thing. And so if you need toilet paper and tissues and all those other things, they have pricing advantage there. And guess what's going to happen with all the private label brands for tissues and toilet paper and paper towels and diapers and all those things as well? All their prices are going to go up, right? And so a company like Procter & Gamble, what they're going to likely end up doing is they're going to raise price more than they really have to raise price so they can help out profitability because they know they can get away with it in this sort of time because everybody else as a competitor is going to do the same exact thing, right? And so this is going to be something that helps out Procter & Gamble's numbers for the next several years ultimately, right? They're only expected to have 4.6% revenue growth. I wouldn't be surprised if they come in with the 6 to 9% number, which would be tremendous for Procter & Gamble, right? That would be tremendous. 4%, they're probably going to get that just from inflation alone, and being able to raise price probably even more than that over the course of this year. And so remember, when it comes to companies like Procter & Gamble, Kimberly-Clark, those companies, there's not as much of a story about revenue growth. For those companies, it's all about profitability and being able to up your dividends and what's your EPS. This is what people care about when it comes to P&G and Kimberly-Clark companies like that. These numbers don't matter nearly as much. What they actually care about, what the investors of these companies care about is this. And so that's why Procter & Gamble and Kimberly-Clark will take as much price as they can possibly take. And they will take it because they have the big brands. So they will jack up their prices and it's already gotten a lot more expensive to buy TP and all those things, and they're going to do it a lot more because they can get away with it at the end of the day because they control so much market share. Now, the most beautiful thing about this is there's a certain stock that goes completely under the radar in a scenario like this that I've been buying very, very heavily, and this stock will ultimately be very, very rewarded in this situation. They're in this sweet spot right now. And that's Honest. This company is in such a great spot for the next 3 years. It's hard for me to even explain how great of a spot, okay? We got the inflation boom going on. Now, Honest gets to see Procter & Gamble and Kimberly-Clark raise price. Now, Honest has already been taking market share from those companies. And we saw that in this latest quarterly report, right? And so Honest is in a position where they could also raise price if they want, right? Just as much as the other companies and probably even help out their EPS more and get to profitability faster. They can do that if they choose, or what they can do is actually keep prices fairly low, not focus on profitability, and focus on continuing to take more and more market share. Procter & Gamble owns several of the biggest diaper brands out there, and Kimberly-Clark owns Huggies brand, which is absolutely massive. So much of the diaper and wipe aisle is controlled by Procter & Gamble and Kimberly-Clark. So as those companies raise price, Honest is just sitting there and they're like, we could raise price as well and help our profitability out, or we won't help our profitability out, but we'll take long-term market share, more and more market share. And so Honest is in this really sweet spot now where they can really do whatever they want. And I'm okay with whatever management decides. I'm perfectly fine with it. If they want to take price and help out their EPS, cool. I'm fine with that. If they want to take market share and continue to become a bigger and bigger company and get more and more branding and more space in those aisles that will help them out long term, I'm perfectly fine with that as well. So I love the position that Honest is in right now. It's about as good as you can possibly get. And remember, Honest owns other brand, it has other product categories outside of diapers and wipes and soaps and shampoos and things like that, although that's a huge part of their business. They also have beauty brands, which likely are all taking pricing right now as well, which Honest is just continues to be in this kind of sweet spot where they're going to be able to do whatever they want. And I think that's just one of many various reasons why this stock's going to be a 3x, 4x type stock over the next few years, let's put it that way, if not a lot more than that. So yeah, that one's just beautiful. No, I like the way we're positioned going into small cap season, which we're about to go into here, okay? And the reason being is essentially you have longs that have gotten longer. And when I say the longs, I mean the strong longs, right? The weak longs have already gone bye-bye out of this market, right? But the strong longs have, as these stocks have gone down and down, they bought heavier and heavier and heavier. And now a lot of these stocks are filled with shorts that are max shorted going into these earnings. And they put themselves in a very, very dangerous situation where, for us longs, think about it with, let's say Tattooed Chef for me. If the stock goes down, I buy it. If the stock stays the same, I buy it. If the stock goes up, I buy it. And there's no situation where I sell the chef. And so from that standpoint, that's a dangerous stock to be max shorting if you're shorting in the market right now. And we've already likely gotten rid of almost pretty much every weak hand that could possibly gotten out of that stock. And the longs are just going to continue to go longer and longer in a stock like that. And so you set a situation up where you could get massive, massive short squeezes. And the way we're positioned in this market is a very fear-driven market right now, right? We're in a very fear-driven market. I'm talking on the retail side. I'm talking on the hedge fund side. I don't care what it is. Tom Lee said he was at that major, hedge fund conference, and I've heard other people that have spoken about that recently. No one was bullish at the hedge fund conference. No one. So big money's not bullish. Small money's not bullish, right? And so I look at that and I'm like, there's only upside from here. If no one's bullish and all of a sudden we can, see some positive numbers, we can get some stock prices start to move. Slowly but surely, you start to get some of these people that aren't bullish, they're either indifferent or they're bearish, to start coming over to the other side, right? And the bearish people start going a little more toward indifferent. The people that are indifferent start to become bullish. And I love the way we're positioned going into the small cap season. I can tell you, this is going into small cap season. This is the most excited I've been going into an earnings season. It doesn't matter what happens to stock prices. I'm not buying or selling them. I'll be likely buying them, but I'm not going to sell them based upon any news that comes out, right? It's not like I make a decision like, Honest drops, 10% on earnings. I'm going to sell the stock. Like it's not like I make that decision at all, right? If anything, I'm just going to buy more shares. So the way we're positioned essentially is, I would call it, man, I don't want to say it's an easy earnings season for small caps, but dang, we're positioned well, man. Dang, we're positioned well. I mean, if you want to see the vibes of the market right now, look at Mr. Kevin. He's doing interviews with Peter Schiff now. Peter Schiff, holy smokers, this ain't no dang jokers, man. If Kevin's starting to interview Peter Schiff, I don't know what's more of a tell in the market on how bearish the market's gotten at a particular time. I mean, that might be the icing on the cake right there. Holy smokers, all right? No, the other thing I really like about the positioning on the market is we've had companies that have really set the bar so insanely low in this market. It's pretty much on the floor. PayPal did that, right? And this stock's now basically $120 a share off the 52-week high of 310. They set the bar on the ground, basically, right? Meta did the same exact thing. This stock was higher in July of 2020 than it is today. Look at how many shares are trading for the stock. 87 million was a volume here today, almost 88 million. 24 million is usually the normal number here. So when it comes to Meta, I mean, they set the bar so low. It's I can't see a scenario where they miss numbers. Let's put it that way. The worst case scenario is they meet numbers. Best case scenario is they come out next quarter and they say, hey, you know what? We were a little too bearish on the numbers this overall year. We're looking a little better. And imagine what's going to happen to the stock price in that scenario, right? Amazon set their bar on the floor essentially. This stock, by the way, was higher in August of 2020 than it is today. They literally put the bar on the floor when it comes to the stock. And when I look at all these stocks and I think about kind of the positioning of the market, I really like the positioning of the market. For the small caps, obviously, we've been trading really, really cheap for the last several months now. And for the large caps, they set the bars very, very darn low now at this point in time. And so I look at that as a scenario where, I'm pretty darn excited nonetheless. And so I'm just kind of ready for a small cap season. Whatever happens with these stocks, I'm going to end up being a buyer in the end, whether they go up, whether they go down, whether they don't do anything. And I'm not going to buy extra heavy going into an earnings period just because I think they're going to do well. Do I think there's a higher probability a lot of these stocks are going to skyrocket up? Yeah, but I'm not going to make bets basing upon that. I'm not going to place short-term call options or things like that. That's not my game. I think a lot of these small caps are ready to fly. And when I mean fly, I mean, make 20, 30, 40, 50, 60, 70% moves in a matter of a week. But with that being said, look what happened with Snapchat, by the way. That's not even a small cap. But with that being said, I'm not going to place extra bets or go extra heavy going into this earnings season or something like that. I'm going to be ready. If any of these stocks drop, I'll be ready to buy. If they don't drop, perfectly fine with me. That's it's all good in the end. And so I like kind of where we're positioned here overall in the market. This is the best time to take stock market investing very, very serious that I've seen in many, many years. Mid caps, small caps, things like that are trading the cheapest they've traded in like a decade. So right now is a great time to take stock market investing serious and learn everything you can possibly know about stocks. Be part of our private Discord chat, everything like that. We got the Valentine's sale coming up here very shortly. Check out pinned comment to get on the wait list for that. Don't forget, if you want some free stocks from Mumu, check out pinned comment down there as well. Much love and have a great day.